Welcome to the Thursday edition of Tech Stocks Daily Podcast. Get set for an intriguing ride through today's buzzing tech narratives. We've got Microsoft under a mixed spell spotlight, weaving between eye-catching growth potential and a tangled FTC antitrust web. Watch out for those snazzy cash flows, though. Over at Xerox, things are heating with a class action legal storm and a surprising stock jump despite underwhelming earnings, leaving analysts scratching their heads. And don't miss Meta, showcasing robust numbers that have them skyrocketing into leading ranks, backed by their mega user base flex. Stay tuned as we unravel the stories shaking up the NASDAQ. Welcome to today's Tech News Rundown, where we're diving headfirst into all the buzziest news surrounding Microsoft. Strap in, because it's been a busy day for Satya Nadella's tech leviathan. First up, Microsoft's getting scrutinized like the new kid in class who brought a double meat hoagie for lunch. Everyone wants a piece of them. What's caught the eye of industry watchers is Microsoft's vibrant comparison with its competitors in the software industry. When sized up next to its rivals, Microsoft is illustrating some market magic and a little bit of mystery. On the magical side, Microsoft boasted a price-to-earnings ratio that's 0.25x less than the industry average, suggesting some solid growth potential. Its price-to-book ratio is only half the industry average, whispering sweet nothings of undervaluation to potential investors. But hold your horses, because a high price-to-sales ratio might just mean that Microsoft is riding a sleek steed of overvaluation at the sales racecourse. Such mixed signals, I know. While Microsoft's return on equity isn't exactly bursting with pizzazz at 8.87%, falling below the line of its industry peers, it's making it rain with a hefty $38.23 billion in earnings before interest, taxes, depreciation, and amortization. Strong cash flow generation? Microsoft's got it in spades, blowing away the industry average by nearly 66 times. Let's not forget their gross profit of $45.49 billion, standing head and shoulders above others with a superior sales performance. In the drama theater, the Xbox game store for Android remains a phantom lurking backstage, primed to say to be or not to be any day now. Microsoft flexed with a completed store, but a legal wrangle has dropped the curtains for now. The courts, or shall we say Judge James Donato, handed down an order that has paused Microsoft's entrance onto the Google Play Store turf, even though Google's sitting tight and insisting they never close the store's front door. It's a digital standoff, worthy of its own Clarkson miniseries. Meanwhile, the plot thickens with the U.S. Federal Trade Commission waltzing into the party with antitrust scrutiny, asking Microsoft's cloud and AI practices to show their dance cards. Sources say it's about whether Microsoft's cutting the rug too hard with market power risks twirling other cloud contenders out of the ballroom. This is happening in a season rife with antitrust murmurings that have already caught Apple, Amazon, and Meta in their tentacles. All in all, Microsoft's got itself a whole buffet of newsworthy tidbits for us, whether it's redefining market evaluations or mapping out future profit Eldorados amid regulatory challenges. Keep your seats, popcorn in hand. These Microsoft dramas and triumphs aren't fading out anytime soon. Hey there, tech lovers. Boy, do we have a Xerox 2-for-1 special in the news today. First up, let's talk lawsuits, because who doesn't love those late-night infomercial moments, right? So Xerox Holdings Corporation, ticker symbol XRX, is in hot water thanks to a class action lawsuit. A big name in the legal world, Braunstein Gewurz & Grossman LLC, announced they've already got their paperwork ready. This whole saga started after several of Xerox's significant bigwigs allegedly forgot to mention a few minor, or should I say major, details about the company's situation from January to October this year. Apparently, after a hefty ergonomic retooling, their sales force faced some turbulence. Territory shuffles, switched up account covers, and voila, you get chaos in sales productivity. Older products were taking the spotlight when they should have been gracefully pirouetting off stage. And this ancient product star kind of threw a wrench or two into launching fresh gear, supposedly making Xerox's earnings outlook a wee bit cloudy. Now, any hopeful investors who are staring mournfully at their Xerox shares are eyeing a chance to get in on the lawsuit action until January 20th, 2025. So if you've got some post-Xerox wallet trauma, you might want to check if you qualify for a lead actor role in this courtroom drama. But wait, cue the wash your tears positive news. Despite the legal hiccups and Xerox's less than stellar third quarter results, we're talking earnings falling short by a striking 52.8%, their shares have actually been on a bit of a heater lately. The stock's popped up 10.1% since their last earnings report. Don't book those tropical island getaway investments just yet, though. Analysts are kind of eyeing Xerox with skepticism given their earnings report miss and an adjusted operating margin getting dialed down, from predictions of 6.5% to merely making the 5% mark. Back to the cash flow, it's almost as moody as a barometer on a stormy day. Xerox's sales revenues dropped 8.7% year over year, with equipment sales deflating faster than my enthusiasm for morning workouts. Yet their cash reserves look decent in the grand scheme, holding at $521 million by the quarter end. Adding to the mixed bag, Xerox downgraded their 2024 outlook, with estimations of a 10% constant currency decline for yearly revenue. So it's fair to say, you're not going to be hearing too many Xerox is crushing it speeches in those investor meetings. When you crunch all the numbers, it turns out that in the industry's cheer squad, Xerox has gotten more of a disinterested meh from analysts, even garnering a Zacks rank number 5. The consensus seems to say, you do you, Xerox, but we're sitting this one out. And that's your cut of today's chart-topping Xerox news song, easy to hum along to, but with a twist of legal and financial woes. Hold on to your VR headsets, folks, because today we're diving into the bustling world of Meta platforms, which is making waves in the tech world yet again, and making sure Zuckerberg isn't just a familiar face. You might see him in a sentence alongside financially robust. So, why is Meta all up in the headlines? Well, it's all about a backstage pass into its industry standing within the interactive media and services scene. Imagine getting the juicy insider scoop at a pop concert. Only here it's more financial metrics and less backstage shenanigans. The company's performance has been dissected and compared to its biggest rivals, kind of like choosing the actual greatest showman of social media. Meta, with its family of apps like Facebook, Instagram, WhatsApp, and Messenger, is basically the largest social media mogul on Earth, boasting nearly 4 billion monthly active users. Whether you're stalking your high school crush on Facebook or double-tapping a cute puppy pic on Insta, Meta's got you covered. The standout? Meta's doing some financial flexing. With a price-to-earnings ratio showing potential for nifty growth, this could be the deal of the century, like finding a designer jacket at a thrift store price. Yet, a price-to-book ratio and price-to-sales ratio high enough to ride roller coasters might suggest Meta's overestimated in some ways. So don't throw your pink slip parties just yet. The real showstopper is their impressive 18.87% revenue growth, leading the industry in a merry dance at something like 6.83%. And with an earnings machine churning out big profits and a return on equity that's healthier than a morning green smoothie, Meta seems to know how to keep those financials looking trim. A cherry on top? Meta's debt-to-equity ratio is lower compared to its top 4 competitors. Apparently, this tech giant is sailing the financial seas with fewer heavy anchors. Investors are probably thinking, should this stock join the motley crew in my investment portfolio? With Meta outperforming other tech titans in some categories, like a peacock strutting through a barnyard, it might just be a contender. But enough of my ramblings, I'm more interested in what you think. Is Meta looking like your next potential golden egg, or is this a Meta moment of deja vu where you've heard enough? Drop your thoughts and unconventional opinions in the comments below. Let's keep this conversation as lively as your late-night scroll through social media. Who knows, maybe one day we'll manage to fit all of Zuckerberg's financial zingers into a TikTok. Until then, I'm all ears. Let's talk about Microsoft for a moment. When we dig into today's news, there's quite a bit to ponder if you're considering whether to buy, sell, or hold. For one, Microsoft's market metrics send some mixed messages. On the one hand, you've got a relatively lower price-to-earnings and price-to-book ratio compared to industry averages, hinting at a potential bargain. On the flip side, the higher price-to-sales ratio could be the party pooper, suggesting possible overvaluation on the sales frontier. But here's where the cloud clears a bit. Microsoft's impressive cash flow defenses. We're talking a whopping $38.23 billion in EBITDA and a gross profit that makes the competition look like they're still in bed, hitting snooze. Plus, they've shown resilience amidst legal challenges, with inventions like the Xbox Game Store drama reminding us they don high-neck collars behind velvet curtains, waiting for the grand stage entrance. The murky waters, of course, come courtesy of regulatory attention. The FTC's got Microsoft under the antitrust magnifying glass, potentially throwing some shade over upcoming moves in cloud and AI sectors. Given all this, if you're a cautious investor, holding might be a cozy middle ground, letting you enjoy peace with a front-row view for Microsoft's next act in this ongoing theater of tech drama. If you're feeling bold and are intrigued by Microsoft's solid show of cash flow powers and market maneuvering, buying could be enticing. But I'd say due diligence is key, and it might be wary visitor chatter, even just to balance the scale of enthusiasm with an eye on possible regulatory impacts. But remember, folks, I'm not your financial advisor, just the tech news guru with a penchant for dramatics. Make sure you dive into more research and maybe consult a finance pro before making any investment leaps. Because just like in tech news, the stock market can be a wild adventure. Wow, what a day on the tech scene. We've got Microsoft dazzling and dazing the market with mixed economic signals and superhero-like cash flow, while grappling with legal headwinds. Xerox is caught in the eye of a legal storm after, let's say, forgetting to include crucial tidbits about their sales dynamics. And despite some shaken investor faith, their shares somehow decided to party on up. Meanwhile, Meta's over here flexing with a jaw-dropping user base and some steamy financial metrics, giving rivals something to double tap and envy. So if you enjoyed today's deep dive into the tech stock wilds and got a kick out of our updates, give that like button a little nudge, hit subscribe to keep the tech news rolling your way, and don't forget to share the love, or the irony, either works. Be sure to return tomorrow. We've got another whirlwind recap lined up just for you.